Okay, talk about paranoia. Um, that SCMI trade and X, talk about paranoia. Look at the volatility in that. Volatility through the roof. Let's see what we got on X. Um, and it's showing some serious pain, but I'm not going to freak on the pain. Let's see what ARK Investments is showing. And that's showing some pain, but I'm not going to freak on the pain. Basically, the option prices just went through the roof on these, and that's why it's showing fear, why it's showing like major pain right now. But options are mean reverting, so I'm not going to freak on that. Our deltas are still neutral. ARK Invest. Let's see what we got on ARK Invest. I can show you. Let me get a chart up. Yeah. Yeah, theoretical would be down 14, but we'll let the markets do their thing. Normalize out here for a minute. And let these things normalize. This is where the fun begins. You get to see and experience what fear is like market wise. If you look like at SCMI, it looks like it's completely destroyed. SCMI is just like, I mean, if you look at just how the volatility, but check this out, volatility went up 256%. So that's literally and volatility is mean reverting. Our deltas are still delta neutral. So I'm not really, volatility is mean reverting. So I'm not really, I mean, if you look at the curve, it just means that the price of the option is just, look at that. I mean, the theoretical's through the roof. So we'll just wait and see, let markets normalize a minute. It's just that the cost of this spread is just, it's ridiculous. Even though it's ridiculous, let's go 374% volatility. Goodness gracious. And remember when we got into it, I think it was like when we got into the trade, I think it was like 33%. This thing went up 10 times, which is why you're seeing the price of this thing. So something's going on with SCMI or SMCI. Something big is going on with that. Let's see what their research news is. And again, I'm not going to freak. Just sit on my hands. As long as the deltas are kind of neutral, I'm not going to, I'm not going to, super micro. Okay. I don't see anything on super micro. Like I said, it's going penny stock. It is definitely trading like a penny stock. And I don't think there's any earnings because I normally go in there. Yeah. No earnings, no dividends, nothing like that. It's just penny stock trading. It just kind of gives you the idea that, yeah, okay, yeah, extended losses on quarter financial report delay. Okay. Extend losses. Wow. 17-month low. But I'm not going to freak. I'm just looking at that volatility that put the price of our spread through the roof. I mean, it's literally through the roof. So we'll see. Where's our deltas? Again, just looking at inventory. 31 delta, that's a 61% chance this thing will get touched. I don't want to mess with it. I mean, we could, let's see, see our delta's down here only 27%. So there's still life in it. I'm just looking at the cost of that. That thing just went, I mean, it skyrocketed. The cost of that trade. Same thing with X. with U.S. Steel, the cost of that trade, and ARK Investments, the cost of ARK Investments. It's just all of them just like volatility is like double. With no X went up even more. Then there's but we'll sit back, wait, let markets do what they do. I'm just like, my goodness, 250. That's 10 times the volatility. That's when you're selling volatility. That's definitely gonna, it's I won't say an anomaly, but it definitely makes your skin crawl. But what you do is you just sit. Okay, look at this. You could tell the volatility just went in terms of the price of volatility. X is not as bad in terms of volatility. It's not as bad. It went up 10%, or no, it went up 18% on X. But SCMI, that's the one that's just like, but we're delta neutral, or we're close to delta neutral. So, you just sit and wait. Don't do anything. It's still delta neutral. You're only SMCI, you're only 4 deltas short. If you get short more deltas, then that's when you that's when you get scared. If you get like, 30, 40 deltas, if we look at our deltas, let's see where we're at on our deltas. I'm just like, my goodness, 27 deltas downside, 31 deltas upside. So, I mean, it's clearly what they're saying is you're still sitting in the middle of the mountain. Not where they expected move, but at least in the middle of the mountain. You're still sitting in the middle. That's just, I mean, I'm just sitting there going, my goodness. When I saw the market doing what it did yesterday, and I saw that SMCI just went ballistic in terms of the price of the spread, or in terms of their volatility. Like if we go to look at the volatility on a date, something's big is in the works for this stock. Look at that. It went from, look at 627% volatility overnight. Now, I don't know if they're thinking this thing is going to go to a penny stock. Look at that volatility. Just the price of our spread went up like through the roof. I don't know if that's, it's a 17-month low. So, of course, I don't know if that's like they're expecting this thing to become a penny stock or not, but it's trading like one. ARK Invest, again, we just went over that gap, so I'm not going to freak. X. Okay, X does have some room to the downside a little bit. So, I got to be real careful in X and the deltas. We're 11 deltas long. So we could start looking at X in terms of tightening up deltas. Again, the cost of the spread went up. That's all we're looking at is the cost of volatility. And volatility just went through the roof. Okay. Let's see. That's VIX. Okay, I don't want VIX. I want X. And these are December spreads, so I'm not really going to freak. Okay, X. We're going to roll that down a little bit. I'm going to roll that once this thing populates a little bit. Let me get out because I got to Hotep there, Brother Will. Yeah, man, I woke up and I was like, man, that SMCI is just tearing me up. But the reason it's tearing me up is because of the price of volatility went up. And that's what happens. You just got to sit on your hands, let markets do what they do. Give me 1 second. I'm going to grab my tea while I got to re-up this Tasty Works. Grab my tea here. Tea. Yeah, I'm just like, my goodness, man, the cost of that spread just went through the roof. 256% volatility overnight, like in one day. That's why you have what's called CVAR. The CVAR tells you the worst case scenario, and this is like, basically this was literally a black swan scenario with SMCI. That is literally like, unheard of type of thing. So give me 1 second. Let me put the chart back up. So I'm just going over inventory and going, my goodness, that's that could scare the daylights out of someone. That could definitely scare somebody. Let me move this strike down though. I do want to move these, get these more. Wait, not SMCI. It's X. That's the one I want to move. X. And look at the volatility went up. I mean, 10%, and let's see, the 5-day change in volatility. I'm just like, my God. I mean, just the 5-day change in volatility is the thing that just really got me going like, whoa. Roll strikes down. And I want to roll this to there. So they're saying I could get 34 cents. We're going to sit there because I don't have any prices up here. And I don't have any prices up. There's no volatility. I mean, there's actually zero volatility in this, which is kind of interesting. Yeah, so we've got 172 credit, 104. Yeah, the volatility is just through the roof. We've got, in terms of our price, 70 to 172 and for X. Something big's on the horizon market-wise, because to see these, I mean, this is U.S. Steel. Up 11% volatility, U.S. Steel, 11%. That's huge in just one day. Because it wasn't like this. It was going down actually. The ARK Invest, I'm gonna sit on my hands on that. I'm gonna sit on my hands on X. Even though we're 11 deltas long, I really want to tighten those deltas. SMCI, I'm gonna sit on my hands on that because we're only 3 deltas. So I'm just gonna sit. No reason to freak. Gotta sit. And just let that market do what it does. I'm just like, this is stuff you don't see a lot. Okay, I mean, this is something you will not see unless there's something like, there might be like a filing, or there's either a lack of filing, or maybe a takeover or something. Something's going on with that particular with the micro, in order to literally go 256% volatility overnight. There's something big on the horizon. Let's see Delta Airlines. I do like the United Airlines that Bat took the other day. He did a United Airlines trade, and I was like, yeah. Let's see. But I do want to see what didn't get filled yesterday. Look at Delta. Wow. My goodness. So what did Delta's volatility went up 6%? Something's going on. Something huge is on the horizon. I'm seeing all these volatilities go up, but prices were pretty flat. Something huge is on the horizon. That's just really weird. Okay, so I mean, which is cool. Delta. Okay, we're gonna sit on our hands. We're only getting 179 out of that. The United Airlines strangle that he put on. See, that's the thing. I couldn't do. I'd have to do this defined risk because I don't want to tie up that kind of capital using that much on a December 20. Actually, we would go out to January. 16 deltas, 15's closest. 14's closest. There's not really a lot of contracts out there. 253 of 922. That's not enough credit. Not enough credit. United Airlines, even though it's going up, and which normally when it goes up, volatility goes down. It's up 5%. Not over. I mean, these were not overnight with those. The one that went overnight was the two trades that I'm in, X and SMCI. Those are the ones that just went straight through the roof volatility wise. So something is going on. Is there, you know what? Let's take a look at something because I'm wondering if there's an announcement with Fed or any kind of numbers that are coming out. Core retail sales. Okay, that came out. And core retail sales. Okay. Actually went down. No biggie. Retail sales. These are inflation indicators. Okay. Retail sales actually went up. Interesting. So retail sales, which is, if it goes up, normally that's expansion, and that should send a market, but not, I mean, it's not like terrible, but retail sales when it goes up, but then you got the core retail sales that got hurt. The revisions of last week got hurt. So I don't think anything major is that would be a mover. It could be, but I don't think that's a mover. I'm just looking at this going, man, something volatility wise, because you've got flat prices, but volatility going up. So let's go to the markets. Their markets. Okay. Markets are getting crushed, which means VIX should be going up. But VIX is only up 2%. So that's nothing. So, I mean, for volatility to spike like that, with barely anything, let's see. Oh, you know what? We're going to go to the volatility of the NASDAQ. Let's see. Wait, what's this ticker symbol for NASDAQ volatility? Let me see if I can find it. Okay, let's see. VOLQ is one of them. Yeah, VXN. VXN, yeah. But let's see, a VOLQ and VXN. But I guess Tasty doesn't have it. Or would it be Cash VXN? No. Because I really want to know what the volatility of the NASDAQ is. I have to go to Thinkorswim, check that out. Let's see what the volatility of NASDAQ. Go to VXN. Okay. All right, here we go. VXN. Oops. Because I'm just kind of curious. Something with these vols, with the fact that these vols, okay, NASDAQ volatility. Okay. Let me see if it'll come in. And if not, I'll try VOLQ. It's interesting. I can't get that on Tasty. That's just one of the drawbacks that I noticed. Just a little drawback is the ability to get a lot of the ability to get some of these indexes, some of these, the things you can't trade. And I love to look at those just to see. Anyways, all right. So, anyways, we've got that. Let's look at some. Oh, wait, we got the cost of money. Let's look at the cost of money. So VIX is barely up. The cost of money is going up. Inflation going up. And the cost of commitment is going down. E-mini ES or SPX down 42. Ouch. It's getting hurt again. See, I could have used this. Not actually yesterday, the trade, the dead trade we had yesterday, but I don't care. I'm not going to freak. Volatility is coming in a little bit. We could tell markets is kind of normalizing. That X trade, let's see if we got a trade on that yet. Got some, okay, good. Now 59 credit. Okay, it's coming in a little bit where we can get more credit. That's what I'm looking for is, let's see where that, okay, good. So we got 59, 43, 161. Okay, now we're starting to come in a little bit and get a little bit more. So 161, 131 is what I could possibly, that's that's how much I could get. 174. Let's see. So if I bought this back and sold that, the best I'd get is around $60, which means that this thing is, volatility starting to normalize a little bit. But I still want higher credit. That's a 26 delta. That means that's a 52% chance. This will make it a 46% chance. I don't want to just move things too much because this thing can skyrocket. And it could go up. And if it goes up, say it could easily hit the 40. And if it goes up to 40, how bad will it be if I move that strike down? Not terrible, but it could get scary. Yeah, volatility is normalizing a little bit. So if it went up to like the 40, it's just some 10 deltas. Usually I freak when it's 15, and I'm like maybe actually about 12 deltas. Let's just check our deltas. We're about 12 deltas. With the volatility the way it is and 12 deltas going the way it is, I don't mind moving this just a little bit. So we're looking at 32 cents. I could tempt fate, move it down to the 26 delta. We still got, 59. I'm going to see if the market will come to me. See if it'll come to me. If it will, then I'll go ahead and do it. Because, again, we're just getting credits. All this is about is getting credit. So let's just make sure we did that. Yeah. Selling the 46 or buying the 48, selling the 46. See, now look at the mid credit is 34. The mid there, see, that's the thing is, okay. Some volatility is normalizing. It's definitely the whole position's normalizing. Just because the price of it is going down. So okay. So we're markets are kind of normalizing themselves a little bit. So we'll just sit on our hands and wait. It's Friday, and I expect that out of a Friday. Yeah, that could get scary. Hold on for 1 second there, brother. That could get scary when you see the option prices go through the roof like that. Let's say our 5-day change. Look at the 5-day change coming back in. Okay, X is still, it's still up there. Let me go back to SMCI and then let me turn off this light real quick. Okay, yeah, 5-day change. I mean, I'm just like, man, something big is out there. Something huge. Big order somewhere happening. It was funny. I've been doing a lot of juicing, and I've got I do like a lot of pomegranate juice and cranberry juice. Oh, one good thing is I wanted to tell you, even when markets go this crazy, one thing that I do is I have a tendency to make sure I have some buying power because that's the key. Because CVAR is like worst case scenario, and what I normally do is I'll hold as much buying power as I can because the cost to hold these things. Like when I first got into the trade, the initial requirement was like $300. The cost of holding this thing is like $1,300 just to hold the position, not to do anything, just to hold it. And that right there is indicative of and so that's one of the things I do is I'll definitely have some spare buying power because of the fact that when things get more volatile, that's when you want to hold some hold your have some powder, some dry powder. Let's take a look at markets one more time because that was at 593. Yeah, all right, so it's down almost 100 points from from its highs. It still would have made any difference in my trade, the XSP trade. That man, I really wanted that trade, but it's about timing. The Trump trade never worked out. Let's go to Bitcoin, see what the speculation is like, and they're still speculating. So, irrespective of heightened volatility, at least in certain stocks, S&P went down, but VIX is barely up, and they're still speculating. So this is there's some because I always look at that Bitcoin to see what the speculate. Look, VIX. I mean, you're 3%, but come on, 50 cents when this thing was up around 20 not too long ago. I mean, look at the chart. Just a week ago, presidential election, it was at 24. It's down what from 24? That's 10 points. That's what damn near 11%. More, yeah, no, 9%. Let's see, 24. 10 is what percentage of 24? Come on, get my mind right. So that would be around 8 something percent. 10 divided by 24. Yeah. So clearly, yeah, this is, I mean, volatility, and look at that. I like that triple top. Volatility definitely, it got sucked out, and you're not seeing much of anything in terms of volatility wanting to do anything. Bitcoin speculation, which means people still want to buy Bitcoin, which means markets are still speculative. They're not, people are not running for the cover. So, irrespective of that, let me see if there's anything that we can get into. Because again, it's all about having some dry powder as well as being able to buy some new trades. Look at that AMC. Now that's a penny stock right there. Remember AMC and the what's the name of the meme stocks and GME? Whatever happened to GME? GameStop is a $27 stock. AMC remember these? Remember the memes and how that stuff was going? Everybody was like, "Look at these spikes." I remember when GameStop that was at 65 a year ago. I remember it was even more than that. I mean, a few years back when GameStop and AMC went through the roof, everybody's like, "Wall Street bets." Look at that. AMC is like $4, and I remember that thing was like, I mean, it was like through the roof. But anyways, let's look for some new trades. So the Delta airline trade is not necessarily the greatest because we're not getting paid enough for it. Okay, I want to get paid for the problem. MicroStrategies again, 36% in the last. So I mean, these things are going up. Volatility is creeping in. SMCI, okay, now it's back down. It's 96%. Remember, it was at 250%. Now it's coming back in a little bit. You know, it's definitely coming in. I mean, that's. I mean, 96 is still more. I mean, when we got into it, we were like, and I think no, it was a little higher when we got into it. But just seeing where it's at, I'm just like, what is Riley? B. Riley Financials. That looks like a penny stock. B. Riley. I just want to see what it looks like. Oh, this got liquidity. Not really. No, there's nothing there. The granularity of the strikes, there's nothing. There's nothing even there. I was just like, wow, that's interesting. Seeing just where the 5-day change is. Anyways, 170% index. We're still the index in SMCI is 239% volatility index overnight. It was never like that. You know, IV rank 117. Something's going on with Supermicro computers. Maybe a takeover, bankruptcy. Who knows? Something's going on with that. Something huge. Anyways, MSOS, the weed stocks, 44.95. It's going up 23%, which means it's probably just where it's trading penny stock. Yeah. I mean, look at that. It just got crushed. And it's a ETF basically on weed. And I've never traded it. It does have weekly, so there is some trading going on there. Okay. The granularity is nothing. Again, it's a penny stock. It's like Tilray, the other weed stock that we got into. It's just let me see where volatility is in this. Implied vols. See if we want to do another lotto ticket. Oh wow. Yeah. 200%. Somebody thinks this thing's gonna go bankrupt. Yeah, they don't somebody does not believe in MSOS lasting any longer. And it got crushed. So it is trading penny stock. The only thing that's good about it is if we were to do this and we did like a $4 2-to-1 trade. I'm just looking at this going, wow. So if we think that this thing, they're saying it could easily get $1 between now and January 17th, that this thing can go $1. In other words, the implied volatility is saying this thing will either double to $8 because it's around 95. We'll round it up to 100% implied volatility. It'll either double to $8 or it'll go to zero. Or it'll go to $2. Excuse me. It'll go to $2. It's either double to $8 or go to $2. I don't mind because this is a lotto ticket trade. Spending $24 or 24 cents to try to make, which is, I mean, clearly you only got a 47% chance and damn near 0% chance, 20% chance of this thing. Again, it's a lotto ticket. It's a pure lotto ticket, but I don't mind, playing a lotto. This is a directional on MSOS. Maybe if we got the 5 strike and we went 5, let's see. Nah. I mean, we could do the 5 strike, try to make, would you want to spin that? Or do you want to just go to lotto? Say, okay, if they think this thing will double or go down, and I don't care, since I'm not selling this, I'm just looking at this saying, hey, this thing could easily get back to around 7-ish, 8-ish. My thing is the time frame. Do you think it'll get there by January? Let's see if there's anything out in February. The 6-9 strike in February. Let's see what that looks like. We're going to pay a little more for it, but why not? Let's take a look. The 6-9 strike, is there anything there? I don't even think there's any volume. Hold on. Oh, there's a little bit. There's nothing. I mean, nothing there. So if we did the 6-9, there's no volume. 6-10. see the 7. No, no. Oops, wait a minute. We wanted to sell that. There we go. Okay. 6.9. Okay. Spend $31 to try to make 293 if it hits the 9th strike. Again, they're saying that it could either basically double or go to 0. We did the 6.8. What about the 5.8? Well, there's no volume here. 5.7. Spend 45 to make 155. 5.10. But it would have to really get up there. You're spending 64 to make about 400. Nah, I'm just looking because the implied volatility. I'm just thinking, out of the money spreads, because implied volatility is just through the roof on that. And it's down more in February on the puts. So if we believe this thing will we can go to 6.8, spend 24 cents to make $1.76. Again, you have a better, it's a 50-50 bet basically in terms of getting 50%. But it's, it's a lotto. You only got a 23% chance this thing will actually do something. But that's getting to the 8th strike in January. Look at what this thing's been doing. It's been literally in a range, falling, basically in a range for damn near half a year. And then it collapses because Donald Trump gets in office and they're thinking that they're going to make marijuana illegal again. And I don't think that's going to happen because they need money. But to get this thing back toward the 8th strike, even if you wanted to get back to the 7, if you wanted to get to the 7 strike, I'm looking at a 4-7 spread. What about a 5-7 spread? Nah, I like the 5 or the 6-8 spread. That means in order to reap full profits of the 176, it would have to get to the 8th strike. But the beautiful thing about this, it's a lotto ticket. I'm just trying to gauge. You're going to make money on the way, regardless. You will definitely, it would have to get there at expiration. But even if it spikes up there, you get 3 times your money. Even if it just spiked up there, you get damn near 3 times your money. So it doesn't have to get there to get that entire thing. So you know what? I like this. It's a lotto ticket. I like lotto tickets. So we'll put that one on just for kicks and giggles. You're spending $24 to make $170. I don't mind that. Let's see what else. Bitcoin. Look at how volatile Bit is. I don't do those type of trades in Bitcoin or coin or whatnot because they're just. I'm looking at the Bitcoin ETF, which is like ridiculously through the roof. Starting to come in a little bit, but that the Donald Trump trade spiked it, and if I did this, what kind of string? Let's look at the deltas. 16 deltas. We're going to go out to January. 16 deltas, 15. Okay. 15 deltas there. 17 deltas here. Let's go to 15. 15, keep it even. 107 of 610. I'm not getting enough for it. So, again, I want to get more, if I'm going to do that trade, I want to get paid. And there's just not enough volatility to get paid. What's the 5-day? Yeah, the 5-day change actually went up in BITO, but you're just not getting paid for it. So let's just not do that. If I'm going to sell, I want to sell something. I want to get paid to sell it. Let's see what else is going on. Palantir. I never do Palantir, but that 23% up. Palantir looks like it has, and I know it doesn't have earnings anytime soon. I know it will have it before January though. Quote details. There's no earnings anytime soon, so we could do this in Palantir. I just don't like the stock because I don't like the guy involved. I think he's an apartheidist. But let's take a look. Okay, 13 is closest to 16, and 15 deltas here. So we're a little bit delta, long deltas, but 207 of 15. Nah, was that 15? 18. You're not getting paid for it. Definitely not getting paid. Let's take a look at. See, I would do Mara, but I did. I have the ARK Invest. Mara, again, another Bitcoin stock. This basically deals with patents. And look, it's doing the same thing. Everything's coming in from the Trump trade. Everything's starting to normalize from Trump's election. Because you would expect anything speculative. If you saw Bitcoin, Bitcoin's still through the roof. What, 90? I mean, they're talking about 100K Bitcoin by the beginning of the year. 17 deltas, as closest to 16. And man, look at the skew on this. Look at that, man, that's insane. So somebody believes this market's going to go up. Because I'm looking at this, and we go to the expected move until the price and the expected move there is 68. Price and the expected move here is 186. Not 196. Somebody believes that this market is going to soar through the roof. Maybe they'll reverse the Trump trade. The only thing is I wouldn't anticipate volatility going down. 172 out of 688. You're not getting paid enough for it. And look at the mountain, the skew on this is just ridiculous. Look at that. I mean, if it jetted up to there tomorrow morning, you'd be down $600. If it jetted to the downside tomorrow morning and you put this trade on, you'd only be down $123. So yeah, somebody believes that this thing's going through the moon. Just by using the short strikes on the deltas. You would like to see this mountain in the middle. So in other words, as it rises, Armageddon happens. Let's see what else we got. Let's look at liquid ETFs, because I'm looking at some of these stocks and I'm kind of like, let's look at liquid ETFs and see if there's anything there. ETFs. And then we're going to go for a non-liquid. No, we shouldn't say non-liquid, because I don't see FXI in here. Every time I do this, I've never seen FXI, and that's really, but not FXI. I mean XLF. I don't see that in the liquid ETFs, and that's very liquid. That's banking. That's financials. And I should see those. I have to put my own little ETF watch list together. Anyways, let's look and see if there's anything. These are pretty liquid, so I'm just looking for volatility. IV rank. Let's see, do we have a trade on EEM? Yeah, we already got one. That's emerging markets. Volatility is going up, which is what we want. We got gold already. Do I want semiconductors? I've been trying to get into that semiconductor trade, but I have not been able to get into that. Okay, IWM. Nope. The IV index is too low. We already got gold, IWM. Well, I mean, it's 29, so it's not like the best. 29, so it's not like something that I would, or it's 23. Qs, 19, there's no way I would sell. 19 volatility. Energy, all these are going down. EWW, we've already got that. We've already got EMM emerging markets. If I did EWW, which I believe is that Brazil? Or Mexico. I keep getting those mixed up. EWZ is Brazil. EWW is Mexico. Oh, energy, XOP. Nope, it's too low. Look at that. Volatility's been sucked out of energy. Yeah, EWZ, Brazil. No, volatility sucked out of that. EWW is just close enough, but I don't think we're going to get paid for it. Let's go to the 16 deltas and see how. Well, yeah, see, there's no liquidity. We can go out to January. 16 deltas, 15. Sell that, and 13 deltas, 15 deltas. Sell that. There's no liquidity here. Yeah, 89 to 50. Yeah, there's nothing. Bid ask price from 0 to 75. There's nothing there in January. And December's too close. We're only 30 some days from the December. So let me see what XLF is looking like. So it might be a butterfly trade. Okay, XLF. Okay, the volatility went up in the last 5 days. IV rank and XLF is 51. Okay. Okay, what's the IV index? Okay, it's very low IV index. These are very low in the teens. So selling is definitely not an option on XLF because there should be no volume on this. There shouldn't be any volume. Well, there's wait, we got volume. Okay, we got some, not much, but we got some. Let's go to the 16 delta. I mean, it's better than I thought. 16 deltas. And let's see if we could even take a trade on this. 19 is closer to 16. So we are long deltas. Let's see if we go down. Okay, we'll go to the 12. Get a little more room. So you're only getting paid 54 cents and $6. Nada. Even if you tried to condor it, doing condors, it wouldn't work on XLF. So this is a directional move. This is definitely directional. Yeah, 16 cents on 84, nada. So if I were to do this, I'd go directional. Let's see what's happened on XLF and financials. Yes, of course, Trump trade. So I would believe that this thing would more than likely go up in volatility, which would be like calendars and stuff like that. I think that gap might be able to be filled if I were to do this at 47. If we were to do the 47 calendar on XLF, let's see. Do I think that thing will get filled before January? No. I don't think that gap will, unless something crazy happened in the world. I'm looking at inauguration January, around that time of ridiculousness happening. So would I do a January, February on that? Sell the January 47, buy the February 47. What would that cost? Sell the Jan, buy the Feb. You're only going to get paid 13 cents a day though on that. So it's not really like it's only, I mean, it's, in terms, it's basically a non-plus, The only thing that really pisses me off is I'm not going to get in order to be able to see it, even though you're not going to really see what the expirations are going to be on it. It's just on Thinkorswim, I could at least see a little better XLF. And let's do this. I'm going to sell the Jan, buy the Feb. Sell the Jan 47. So the Jan 47. And remember that 47 has only got I haven't looked at the deltas, but we're going to look here in a minute. And buy the Feb. By the Feb 47. I'm just kind of curious what this would look like on a graph. Oh, something got filled. What? I wonder what got filled. We'll take a look at it in a minute. Maybe it was that, what's his name? So, okay. So 22 cents per contract. Let's analyze this and see if there's any money being made on this. I mean, on Thinkorswim, you have the probability of you can only see this to double check this. Let's get rid of this double dag at December double dag on XLF. I didn't know I had a December double dag I was looking at. Okay. You could possibly make about 71 bucks if it goes there by then. So, I mean, you can make some money, but I mean, in terms of what you're getting paid for it, you know, you're only getting, I mean, the theta is only 18 cents of theta. They're saying 13 here. We'll say 15 cents of theta. But I mean, theoretically, if it's stopped there, you can make that. Theoretically, at expiration. My thing is, why not? It's only 22 cents. But I think that this could actually go down. I could double diagonal it. If I did a double diag, okay, if I made this a double diagonal, 43, or made it a diagonal spread, excuse me. I keep wanting to say double diag. I can make this a diagonal spread by moving the 47 up. We'll go 40, 49, 47. That's a $2 and 72 cents of a $2 spread. So the 49.47 diagonal. Yeah, we could do that. 49.47, 72 is a $2 spread. Is it around 60% of that $2? No, so I'm not really pissed off at this. I'm not pissed off at this trade. 64 cents, a 64% chance of making, you're only getting 7 cents a day in theta. I mean, it is a gamble, that this thing could get to the 47 strike. If it gets to 47, anywhere between now, you could double your money if it got there tomorrow at 47 bucks. No, not double. No, you'd make 60% of what you cost. You'd make about 60 bucks if it got there tomorrow. If we did the 48.47, I mean, I'm just kind of playing with this a little bit. 48.47, just because I believe it could get down there. 48.47, you wouldn't make as much. You'd probably make, like 33% if it got there tomorrow. Overall, you're basically over. No, I'll keep this as a calendar because it's cheap. It's a lotto ticket. Why not? Just to see what happens. And that's January. To see if we could triple our money. We'll see if we could triple our money. I mean, it's a gamble. If XLF falls, chances are you'll get a lot of volatility. Things will go crazy. I mean, if it fell tomorrow, you wouldn't double your money. If it fell tomorrow, you would only make, basically make, just a couple bucks. Theoretically, it'd be damn near nothing. But I'm just thinking, hey, why not I don't think that this will fall before February. This thing will go and fall down to 47. I think it's going to be a while. It may even go up quite a bit. But I have a tendency, because of the Trump effect, I'm looking at possibility of this thing happening, inauguration. I'm not saying it will. I'm just saying what if. MSOS, okay, so that trade got filled, the cheap trade, vertical, and the cheap calendar. I haven't been able to find any SMCI, man, still yet. Look at that, 239% volatility. My goodness, the index. In the last 5 days, let's see where our vols are for the last 5 days. We're okay, 96. So it came down a little bit. 96% vol in the last 5 days. X is still painful. X still 16% vol. What's the index? Vol index. It's 81%, so it went up. So of course, the prices of these things is what's hurting us. The price of the spreads just going through the roof because of volatility. I mean, volatility is just getting ridiculous. So that's what's really got, that's where the pain is coming from. ARK Invest, that came in a little bit, so that I kind of figured that would be happening. So we'll just sit on our hands on just sit on our hands on a couple of trades. We got a couple of lotto tickets. The airlines, airline, and the what's the other one I'm looking at? Okay, I'm still working on X, trying to the X trade. You know what? Let's see what we got going on here, because we're gonna have to deal with that. Yeah, so I'm trying to get, see, now it's only at 20% credit. Volatility just went ridiculous. Ridiculous. We had it up there at once, but there's no way we're going to get filled at 60. Let's try to move that strike down again, because we are 13 deltas, and we will have to do something to delta neutral this. See, that's the thing. If I move it down here, that's a 50% chance it'll get hit for 30 cents credit. Move it here, we'll get 56 cents credit to the 45, but that's a 54% chance, 56% chance that it'll get to 45. 50, and that's where the highs were at earlier. And this thing could easily hit a range. If we took it, that's 45 right around. If we took it to the 40, what is the other one? The 46, we're not going to get as much credit. But you know what? Let's see if that market will come up on us. See if we can get 40 cents. Because you saw how wide the markets were. I mean, we're trading 31 to from the mid to the ultimate credit, 31 to 80. If you're looking at these bid ask prices, 79, 137, 119, 159. It's wide enough to drive a truck in there. So if that's the case, I'm gonna try to see if this market will come up to me. Instead, and not really like, if that market will come up to me, I'm cool. They're saying the mid is 30. I'm trying to get even more, because I'm saying, hey, that market could easily hit that in a heartbeat. And that's just an X, the one that we're getting hurt on. And if we look at that, we could look at the trade. Again, it's not about price as much as it is volatility. It's just, we sold the volatility, and now volatility expanded. But the thing I like about this is volatility is mean reverting. The only thing with X is we are getting, the deltas. We do need to address those deltas real soon, because X is definitely collapsing. That's the only one I'm looking at in terms of addressing deltas. I mean, it's literally almost, it could easily hit $34. And that's where, we really definitely got to address that, because the strikes, I think, are 33. I think we got a 33 strike. So those deltas, that's a definite must. We're at 13 deltas already. SMCI, again, that is a volatility. Look at volatility. I mean, the reason you can tell volatility, look how far the mountain is from the price, from that. That just means the price of the spread just expanded on you. We are a little bit, in terms of our expected move, we're a little bit, off on there, because, we've got more expected to the upside than downside. But if we're looking and just doing straight quant and straight deltas, the probability of this hitting one side or the next, we've got 54 over here, 56 over here, and 54 over here. So we're very close neutral deltas on this, on SMCI. One delta long, that's it. So I'm not really like, at least in probability's sake, So, even though the expected move is saying it expects it to go down, probabilities are saying we're still in the wheelhouse. We're still okay. I really want this market to come up on me on X, because this thing is getting destroyed. and they're looking at that thing easily could get down to $33 easily. Remember, this thing can move. It can move $2.60, and that's what happened. This big candle right here, that thing moved $1.56 on that one big candle. So this thing could easily move, $2.60 on us, $2.80. Anyways, just look at this right here. I wonder if that wasn't even earnings, and that was a $10 move on U.S. Steel. I think that was the Japanese thing when Trump was talking about, or he said something like it'll never be sold to Japan. Anyways, it is what it is. I'm just trying to find, okay, liquid ETS, there was nothing there. We could possibly buy volatility on like XLU, XLE, XLE. Let's look at this. See about calendars and stuff like that. Buying volatility means you believe that this thing would go down. XLE is your energy sector. If we did, and we did like because there's not a lot of volatility to sell in this. If we believe this thing could go down to 90, by when? Okay. They're talking about, okay, it's at 95. Say about February, this thing can move $7 by February or by January, $5 by January. That'll give you your 90. What would happen if we hit the 90 strike down there? Again, these are like out of the money lotto tickets. January, February. $90 lotto ticket. That costs you 68 cents on that. And let's go theoretically. Again, I like the Thinkorswim because you can get it graphically. But let's say theoretically that this thing went down per contract IVs. No, let's just do the overall. If this thing went down to $90, $90 by February, if it went down there by February, and what is that? Not even, no, by January, excuse me. By the January 17th, so I believe that's our expiration. So January 17th. If that thing went down there by January 17th, yeah, you'd be theoretically, all things being equal, you'd be up $135. All things being equal. If it got down there by then, but we know that markets are efficient and they're not going to do that by January. If that happened, so you would basically make about 90%. If you did, no, I'd say, close to about 90% on your money, close to it. That's if it did that. That's a lotto ticket. So, I'm not mad at it. I'm just like, hey, but it's something to kind of take a look at. But here's the kicker. Volatility. Well, see, this is an ETF. But commodities normally, when it goes down, volatility comes out of it in commodities. So you would see this actually suck volatility out. So you wouldn't be getting paid like that whole thing, because when you're buying volatility, you want volatility to go up, not out. So that's the only drawback on XLE being a commodity. Same thing, XOP, same thing. The XOP, I like the fact that volatility is coming out of these. It came out 2% or 0.2%. I like it when it gets destroyed, but if I'm going to buy, I want to buy cheap, is what I'm saying. GLD, IV index is 16, 64 IV rank. We've already got GDX on. Semiconductors, I've been trying to get into that trade. Everything looks good here. The only problem with it is, again, I'd have to condor it because it's very expensive. It's like $241 stock. There's no way in earth I would go and do a strangle in that, because it would cost you several $1,000. 19 deltas. Let's see. Let's go 15. 15 deltas and 15 deltas here. That strangle. To do that strangle. Okay. Oh, no. Actually, it's not bad. It's a quarter, not. It's 1/5. So it's not. I would never do that. I would never put that only to get a fifth of the credit. So I would have to condor it, which means if I did $10 condor, $10 condor, getting 217 of 783, you're not getting a third the width of the strike. So it's not like, I mean, it's just underneath what you would do to get paid on this. And that's doing the January, 123 of 377. I mean, it's just under the you do get an 82% chance of making 50%, and a 60. You know what? I like this. We're gonna do this, but we're gonna make that market come to me. Let's see. Okay. Okay, between that, from 121 to 134, looks like we could possibly, it looks like it wants to come up in price. Something's going on with this. Maybe because of its falling. Now this thing can move. We've got $24 move that this thing can move. Okay. We've got our curve should be kind of neutral. Maybe a little more skewed to the upside. A little more upside skew in this. In terms of where's our mountain? Okay. That doesn't look right. Oh wait, I know why. I forgot. This is why. Okay, reset these. Reset now. Okay. I was like, what the hell? Okay, anyways. Yeah, it looks, I mean, we could easily get filled at 128 on this. So I want this market to come up to me. There is a little bit of upside. Now when I say the skew, what happens, again, because these are $5 odd strikes, if every trade I get into, I know I'm going to adjust. It's not a if, it's a guarantee. I have to adjust it. That's every trade you get into. The first thing you got to tell yourself is, AKW, good to see you. First thing you know, you're going to adjust the trade. It's not a if, it's a guarantee. You're going to adjust the trade. So the thing is if I get into it and I had to adjust to the downside, that makes my strikes $10. Buying power goes up by 8, but am I getting the credit for it? No. I'm not getting enough credit. I'm only getting 60 cents. If I had to adjust, maybe 70 cents. But the buying power went from $3, 3.77, about, let's say rounded up to $4 to $8. Double that. So that's the only drawback that I have, because I don't want to have that much buying power in a trade just to go ahead and get an adjustment of a few cents. If it went from here and I went up, here now we're getting about $1, and so it's it's not great. It's not great. The buying power getting from 120 to 191, 70 cents to get. Because every trade you get into, you're going to adjust, and you're just not getting paid for the adjustments, even though you have 82% chance of making at least 50% on this before expiration. Is the juice worth the squeeze? The only way it'll be worth the squeeze is if I can make that market come to me. And if it could come to me, then, because you're getting paid $1.50 a day in theta. So I don't mind that, getting paid that per day. But I'm going to make this thing come to me. That's the key, is to make this market come up. And if it does, it does. So that should be it, just to give us kind of an idea. SMCI and X, we're sitting on our hands in that, even though those trades are, it's scary. When I get up and I see the trade goes to 256% volatility, basically, literally doubling our losses like it was nothing. It didn't really double, but it just kind of like I think we got like 233 on credit, and then all of a sudden it just wiped most of that out in terms of I think it was up to like like we sold it for 233, and now all of a sudden it's up to the price goes up to 333. That's scary. That really is scary when you get up. But when you look at why, then it makes things more logical. Because looking at it like, oh my God, it's gonna Armageddon. That's not the case. The reason why is because the price of the spread went up, but you're delta neutral. As long as you're delta neutral, it's okay. But if you're not delta neutral and you got spreads going widening on you, you got to address those deltas like we did with X. We definitely got to address those deltas because those deltas are not delta neutral. Those deltas are way it's going against us. So but SMCI, we're like 2 deltas long. The X trade, we're in that 15 deltas, so that has to be addressed. That has to be looked at. That cannot sit much longer in terms of just letting it just hang out there, because that's why that trade is scary. Not only is it the deltas, but we're also the price of the spread went up. And that's the key. The price of that spread going up like that is most of why the losses are there. The deltas are just contributing to the pain. Because remember, we're even if we roll these strikes down, we can roll them down, but it still doesn't matter. The price of the price of the pain is what I'm looking at. And that's the widening of that spread. That's the key. That's the thing that I'm really, really more concerned about on X than anything else. Majorly concerned about that. Get those deltas neutral, and let's just keep getting credit. That's all we're doing is trying to get credit, as much credit as we can on that. And this is, this is crazy. I'm just trying to let's see. Let me just do something here real quick before I conclude. I was going to close one more time. If I rolled that strike down. Yeah, pricing is all over the place in X. If I rolled that down, I'm just looking at the cost of the trade. My goodness, yeah, it's everywhere. Something's up with U.S. Steel. Maybe there's going to be a takeover. Maybe nationalization. Who knows? But something's up with U.S. Steel as well as SMCI. But that's cool. That's what we do. We trade. We try to trade it. SMCI. We'll see if that pulls back and the prices get a little better. Although the deltas, it's volatility is going up. So it is what it is. Anyways, we'll go ahead and see what happens with those. If anything groundbreaking happens, I'll just do another session later. But as of now, we're just going to sit on our hands. Anyways, Hotep, take care.